Okay, good day, guys. Welcome back to my channel mentor session. So today's topic is going to be about backtesting for unshakable trading consistency. Like it's a very important topic. I know most of you have been asking me, how do you actually learn faster through backtesting? How do you backtest without replay tool? And why is replay tool not best for backtesting? And in this video, I'll be explaining all this, how to backtest for unshakable trading consistency. And when I'm talking about consistency, I'm talking about balancing your wins and your losses. Of losses are inevitable. Losses are just like inevitable. They are avoidable, but they are not. They are inevitable because you must take losses, but you can avoid unnecessary losses. How can you? How will you know this stuff? It's not just about a mentor teaching you this and this and this. Sometimes you need to actually backtest to understand the fundamentals, why fundamentals or technicals, like why this doesn't work or why that doesn't work. And the same way, losses are inevitable. Profit should also be inevitable. You understand? So same way losses are inevitable, that's how profit should also be inevitable in the market. And today I'm going to teach you how to backtest consistently for consistent or shakable trading consistency or what. Okay, sorry about that, but that's what I'm going to be teaching today. How to backtest and learn faster. You're a beginner. I'm not talking about beginner, maybe intermediate trader, and you want to just start your journey towards being a pro. It starts right here in this video. So at the end of this video, you should learn. Number one thing you should learn is how to backtest flawlessly. When I'm talking about backtesting flawlessly, I'm not talking about going to the charts and spamming where you would have hit TPs and feel good about it. That's not what I'm talking about. I'm not just talking about using the replay tool. You cut out half of the chart. You cut out half of your chart and start testing yourself. That's not the kind of backtesting I'm talking about. It's not about backtesting you actually learn from. So the first thing you learn is how to backtest flawlessly. The second thing you should learn from the video is how to learn faster from your backtesting. Now, how am I going to achieve that in this video? So in this video, I'll teach you how to backtest, So in that backtest, in this backtest, we'll backtest in the market. We'll be true to ourselves. The important thing in learning faster from backtesting is being true to yourself. And by being true to yourself, mark out your TPs, mark out your SL, and ask yourself, why did this SL occur? How is this SL actually avoidable? These things, these questions, I'll be using actually I'll be using this chart, past data here, but I will show you how I do everything and how I come up with rules to help myself. So the next thing is how to treat how to treat consistently with confidence. How to It's very important. Confidence is very important. When you know your pattern, some of us trade actually, but we don't actually have a system we trade with. Some of us don't actually have a system we trade with. You might think when I talk about system, you might just be thinking liquidity, order block, liquidity, order block. No, that's not the only. There is some systems you put in place to make sure that your trading almost looks like a bot or a machine is trading. That's what I mean. What I mean when I say your consistency will give you confidence or whatever. Is your trading system will just be like SL here, SL here. Okay, I'm out of the market because you know that from your past data you've articulated or past data you've gathered, you're now setting that after SL is a new range or structural range, the next thing could be change of trend or can push your direction, give another entry for you to take and write it or move against you. So all this stuff is what you learn on this video. And the next stuff is how to make your own how to make your own trading rules to guide your consistency. There's so many trading rules that There's so many trading rules. For example, I used to ask my mentors. I used to ask my mentor this. I used to text my mentors, and I test like Tony Linger. I was testing them. I'll ask them, "Do you trade Asian session? Why should I not trade Asian session?" And in their rules, when they're talking, they'll be like, "Don't trade in midnight. Don't trade at night. It's not good. It can cause overtrades and the rest." But you find out that when you sleep and wake up, when you wake up, they will start posting TPs and the rest. Understand? So I used to ask them, and they'll just tell me, "Don't trade Asian session." But why shouldn't I trade Asian session? I was able to back test myself, and I found out that Asian session is not really a problem. As long as I have the right direction, right entry, Asian session is not technically not a problem. Unless that's if for me, it's not really the problem because of the kind of time frame I trade. I trade 1 hour time frame for my entry. I hate going below 1 hour time frame or above for my entry. I could go above, but I hate going below 1 hour time frame. So the kind of time frame I trade, I've backtested and gathered data and find out that Asian session is not the problem. Most setup actually plays that in Asian session, although sometimes there will be manipulations, but like 80% of the time, as long as it's correct, it will actually play out. So there's no need hitting on Asian session, and you hardly see the right setup on my pairs going well or like triggering Asian session. But if it happens, it actually goes well. So this kind of rules, and just like the last video we talked about breaker blocks and the rest, this stuff is not, maybe don't touch it, but this stuff, how will you be setting for yourself? There's some questions you actually have. The answer is in the chat, so that's what you should be able to do. So that's one that point you should learn from this video. This is how to question and answer yourself. Like the Asian session stuff, I questioned them, they gave me vague answers while they were doing that. Then I had to go and answer myself on the chat. So that's what we're doing in this video. Please stick around, don't miss this video. Don't miss this video. Make sure you don't miss this video. Stick around. Let's get into the video. But before that, today's video is sponsored by D.W.O.R. So let's get into that before we get into the video. Before we get back into the video, today I would like to introduce a broker that I use over the past few months that are very, very good and very, very reliable. So today I'm going to share something interesting for beginner traders and pro traders, whichever level you are. So right now, with TradeW, you can start trading with just $5 and instantly get a cashback of up to $200. That's crazy bonus. Yes, only $5 to unlock a real trading opportunity. No gimmicks, no hidden fees. Let me show you how simple it is. First, you need to just create an account with the link in the description. This link will give you access to extra rewards and vouchers. So you must use the link in the description. Make your first deposit of like $5, and once you're done, the bonus will be automatically added to your account. You can see right here. And the bonus is automatically added to my account. So that's it right here. Once you're done, the bonus is automatically added to your account. Then you can withdraw anytime. You just need to verify your KYC, and it's very easy. But yeah, you need to trade, but yeah, you can withdraw anytime. Just verify your KYC. Now this is, go here, verify your KYC. It's very easy. Just your NIN number. You put down your name, your NIN number, and you verify your KYC. Remember, this TradeW is not a new broker. It's been there for a very long time. Go to your Play Store and download TradeW broker and start using this broker today. Use the link to have access to this wonderful bonus I'm talking about. So now let's talk about the market. Let's just talk a bit about the market now, especially gold. Let's talk about gold. Recently, gold prices have shown strong momentum due to global inflation concerns. That means there are more short-term opportunities for both buyers and sell setups. With this bonus, you can explore trading safety and learn how to manage your risk efficiently and the rest. So if you've been waiting to start your trading journey, this is your sign. Click the referral link and make a deposit of $5 and get up to $200 bonus. Exclusive vouchers only through my link. Now, yeah, just trade smart, learn fast, and grow your profit with TradeW. Remember, the withdrawals are also fast and reliable, very fast and reliable. This broker works well for me, and they also you can link your account to Meta 5, Meta 4, whichever one you prefer. Very nice broker, and don't miss out on this opportunity, guys. Let's get back into the video. Okay, so into the video, and now when I want to backtest, how I backtest, the first thing I pay attention to is direction. Direction is the key point, because your strategy should have an edge over your pair. Your pair should not have an edge over your strategy. That's one important thing to note. So when you're picking pair, you're actually going to trade. Make sure that your strategy has an edge right from the higher time frame. Okay, it's not GU. I'll be using GPUSD. I love GPUSD. I don't know if you noticed. Most of my examples are on GPS. GPS is just so clean and smooth. So for this stuff I've cleared my GPS chart. So what do I mean by have clear? It should be clear. Just look at this. Look at this stuff. Look at this stuff. If you go on GPS, if you go on 3 months time frame, you see GPSD respective liquidity and point of interest. If you go on 1 day time frame, look at it here, QMR. Everything it always respects structure. GPS is a model pair, and this is kind of pair that I actually like using. Not only to teach why I like trading. If you note most of this, I love GBP pairs, especially GBP USD. It's just so great. So your strategy, your special respective strategy. That's why I said. And the next thing when you want to backtest, when you want to actually backtest, the next thing you do is you map out where you want to backtest from. Now this is the weekly time frame GBP and I don't even need to tell you this is an order block and liquidity, clean order block and liquidity. So in this video I'll be backtesting. What I'm going to do is I'll backtest and apply my strategy from a particular portion of the chart to the other end, and hopefully, or not hopefully, at the end of the video, I'm going to learn something, or probably you're going to learn something from it. So this is how I backtest. What I do is market a particular point of interest with a tailored direction, and I don't want the place and the stuff I'm marking out to be like a pair that's like moving through support and resistance. Then I'll start marking up point of interest and say, okay, I'm going to backtest because it's bullish. I can already see it's bullish. No, the one of the first thing I say is your directional bias, and for that directional bias, so for you to get that directional bias, well, it has to be a pair that follows your strategy, and GPUSD follows my strategy, and you can see clearly that this is another block and this another block and its liquidity. So yes, this stuff, I would definitely see this stuff in the market and know that this pair is bullish. I would definitely see it and know this pair is bullish. So you need to take this tool. I don't know what the name of this tool is, and place it from the starting of where you want to backtest from. And let me check what the name of this tool. Vertical line. You need to take out the vertical line. And the next thing I'm going to use is the horizontal line. I used my vertical line and my horizontal line for backtesting. So the next thing I'll place this straight line. This is the horizontal line. I'll place it there. And the reason for this is I don't want to. Okay, yeah. Stop. Let me stop blabbing stuff. So this video will not be too long. So I've measured the reason why I placed this and this here is, yeah, when I hit a cell or this pair G is not really the best pair to do this stuff, to actually learn stuff from. So I've actually also backtest GBP backtest, also backtest USD those pair GBP for this run. You can see here on this weekly time frame price was technically just trended. So you need to look for pairs that actually not didn't actually just trend from that point of interest to the other, so you can actually learn more on what you're trying to backtest. But yeah, I put this thing here so I won't go switch from my entry time frame to my higher time frame so much while backtesting. That's the reason why this stuff is here. But okay, when I've marked out my point of interest where I want to backtest from, the next thing I'm going to do is move down. I'll keep moving down. Okay, this is right here. Let me adjust it because I'm trying to so I'll start backtesting from where price actually struck our point of interest and move down to our 1 hour time frame. Okay, so okay, when you mark up your direction from your higher time frame, the next thing you need to do is find point of interest the point of interest at their best form. So when I'm talking about point of interest at their best form, that's when I came up with the judgment need to retrace at least 80%. The best type of judgment is the one that trace 80% and the one that breaks structure. So that's finding point of interest at their best forms. And let me just throw small light. What when I came across this stuff, before now, I used to okay, I always consider that anytime there's a brief pause, anytime that there is a brief, I'm talking about from my own perspective how I look at the market. Anytime there's a brief pause in the middle before in the middle that 50% before price creates a high or creates a low, that's brief pause. When market makes a brief pause there, that's when we now have a new range. That new range, it simply means that price actually stopped at 50%, came down again a little or so to grab liquidity from the right zone to start pushing up. It might now give setup in that upward direction. Any setup it gives in that upward direction is now valid because it has a required liquidity. But if the new range fails, then the structure range is very valid. And then I came across stuff like this and I noticed that this new range kept failing sometimes, and it was due to and it was mostly because of the pullback that should cause the new range was single candles. Now, this is where one of the rules comes in. When you see losses, when you encounter losses in the market, you need to find a way to avoid those losses. As you're backtesting, how could you have avoided these losses? So how I looked at this stuff was okay. Single candles as pullbacks don't work. I'm going to scrape it out. So what I have to do is now go to other pairs or go to the same pair, keep back testing, and now validate if it is actually true that single candles as the pullback in 50% cannot create new range. And when I backtested this stuff, it actually came out to be true. So sometimes you make rules. Sometimes you make rules that works for only that scenarios. For example, I said this single candle doesn't work. Let's say 3 more scenarios says it doesn't. 5 more scenarios says it works. 10 more says it works. This now invalidates that rule. That means that rule I created only worked on that situation. When it's not really valid, I just used the rule to cope out of a loss that I would have still taken. So yeah, that's how to adjust your rules in case any of your rules isn't actually working. So that's the stuff. Then the next thing is identify winners and losers. Okay. This is a losing trade, and I've identified that because of the single candle that pulls back, the single candle that actually pulls back at the 50%. If it's a single candle that pulls back at 50%, no matter how nice the inducements are, you can see this inducement was more than 80%. It was a very nice inducement. Probably on lower time frame, a breakout block would have pushed this stuff to the upside, but it was a single candle acting as a medium to create a new range. That was very wrong. So this is what I've learned from this loss, and I've applied it forward into my other trades and found out that yes, that rule actually works. I've created a rule and it actually works. So let's learn from this loss. What was wrong with this loss? Price came, tapped into the weak, created liquidity, and the body was free. But the thing is that price retraced too deep. Price retraced too deep. That was the only flaw of this, and it's not really a strategist problem. Price just does whatever it likes. You see, in trading, these strategies we have, whether MSN or whatever, they already have a fixed win rate of like 90%. Sorry. So now it now depends on each trader. You can see that there is a chance of losing, even no matter how clean anything is, there's a chance of losing, just like this. Although some people have used a bigger SL, but there is always a chance of losing in the market. The strategy gives room for feels like failing in the market. The strategy gives room for that failing in the market. Now the your win rate now depends on you, because out of that 90 RR, some folks will go on with 50, 60, 20, 10. It all depends on you. So don't only learn from your losses, also learn from your wins. For example, you can see that this setup was in the structural, or the structural was in the structural range. And why was it valid to hold? Because majorly because there was no new range to stop it. That's why it held. Now, why did this setup hold? Why didn't I wait for price to break structure first, create inducement and come down? Isn't finding a setup right here risky? And the answer is no, because price came into the right zone, into the discount zone. And now, before price will break structure, I'm very much free to find a setup in that discount zone. That's people that probably missed the first one, to find a re-entry to break structure. It's very normal. So there are actually more better examples. This I use this stuff as my examples in my last video when I talked about types of breakout block to use. Let me check if let me check. Let me check out something. Okay, let me see this, look at an example of this stuff. Look at an example of this stuff. From here to here is a range, on its own. From here to here is a range on its own. You can see that before price or after price broke out, or while price was trying to create this high right here, you can see price, these brief pauses, came back into this zone. Price brief pauses and came back into the discount zone before pushing up. Now, any setup that you find above it, becomes valid. Price doesn't need to come back down to tap any point of interest down anymore, because price has retraced. Price did a proper retracement before creating a high. So there is now structural range and there's a new range. Wait, let me get this stuff. So let's say, for example, this fails. I saw somebody came to me and was asking me, like, he asked me something like this: why don't we consider this? Like, if this stuff fails, now why don't we consider this point of interest? I think there's a rule. I backtested and found out a rule. That rule was talking about. For example, price. Price has a setup. Price had. Let me say price. Price did this, created inducement, now create inducement, and yeah, this stuff held. This stuff here held, and now price is coming back down. Price probably did not give inducement, so it's coming back down. Now the next thing you think of is to take this trade from here. I don't know if I can give the best example, but it's going to be something like this. You would think that you need to take this trade for here, but this stuff you're considering as its liquidity, but as a result of a valid setup playing out, so it's not going to hold. Instead, this is actually the liquidity for this point of interest. And this all depends on where exactly the setup is falling under, with that structural range or anywhere. I just saw backtesting. I was asking myself questions. I was answering my questions and that stuff. So that's what I came up with, and I checked it out, and it's actually something that actually holds in the market. So what am I saying? Yeah, you saw a setup here, and yeah, that's structural range. This stuff is what I was talking about right here, but this was just a single candle. You can see here multiple candles did this, and here just a single candle did this. There's many. Okay, see a very good example again. See a very good. I think I will have to go to daily time frame because to explain this one. See a very good example. See another rule I made up why doing this stuff, why backtesting, was I noticed, okay, you can see this break of structure first pullback. Okay, this one you cannot consider this point of interest because of this liquidity. It's not 80%. Measure it out yourself. So this was the point of interest. Price came to hit SL. Remember, this is now the structural range. This is now the structural range. And what can you see? Was it a single candle that caused this stuff? This is not a single candle. This is definitely not a single candle. This is like body closure and that stuff. So this is definitely something complete stuff. Sorry, no sorry. Stuff this is definitely complete stuff. Price retested the 50% and it wasn't single candles. So any setup you find above it is definitely valid. Any setup you find above it is definitely valid. So I took this one SL, and of course since it's a structure range, since it's in the structure range, you could technically just wait for a setup in the structure range down here to hold since this one failed, but price gave another entry right here. So I took it again to loss. Next thing you do is you will not just start speculating. Next thing you do is or next thing I do is I come up. Next thing I do is I come up, measure this stuff. Don't chase your trades. Measure this stuff. I think from here to here. Measure this stuff. Wait for price to enter inside the discount zone, and then find the entry to push it up. Now, I don't know if one of my video I explained how when price takes out a strong high or a strong low, there's always retracement. I think I measured that stuff in one of my videos. Price taking out strong highs and strong lows, retracement. But you will not get a clear feel of what that means on GU was trending this period. You need to look at USDJPY especially, GPAD. You can check GJ so you see what I mean by when price takes out a strong high or a strong low, retracement is anticipated. You can also use your Fibonacci to determine this retracement. Depends on the kind of high. For example, this type of high, you can see this type of high doesn't require too much retracement, and if there's liquidity for the high, there's price will usually just use the high as breaker block and push up. This is what happened here, and you can see it's the same thing with here. That's what trying to create. When price look at this too, price just simply just bust down, tap into it, and start pushing to the upside. When price takes out a highs like this, that when you expect deep retracement. You can see even a 1 day QMR form as a result, and price there pushing to the downside. You go and check this in backtest with other pairs too. You can go and check out all this stuff too. Without the POI being on top or below, you just notice, of course, on higher time frame there'll be a POI, but that one being visibly like this is a strong high. That's what I'm expecting retracement. And before any buys or push to the upside can happen, at least price will take out half. I think this is half. Price at least touch here before anything bullish will consider in the market. So that is so, like I said, we allow price to retrace properly. Allow price to retrace properly, and what do? We now look for an entry to push price. You can see this again. Price. If I measure from here, I don't want to start talking about this new range and this stuff because it might start influencing how you take your trades. And from here to here, I can see that price came to the 50% for pushing up. I expected this to hold. It failed. The next point of interest is the one in the structural range. Then, however, push to the upside, and let's not focus on that. So the stuff is that wherever you trade or wherever you trade, when you make these new rules, make sure you apply this rule to the future trades in the backtesting. Apply these rules to the future trade in backtesting or other pairs and check if these rules actually helps. I've already talked about how you can make some rules that only helps in one situation. It means that you just rule out of emotion, so you should definitely discard those rules. And I've talked about how you differentiate what the difference between your wins and your losses. Why the wins and these losses are they avoidable? This loss you should not avoid them. This kind of losses you don't avoid them. But taking a trade from here is you're chasing market. You're chasing the market. If you took a trade from here, you're chasing the market. So that's the stuff. Don't as you're trying to do stuff. You also don't chase anything. I also talk about if there's questions you might have. Sometimes when you have questions, the best thing to just practice and find the answer for yourself. For example, okay, I told you about my Asian session problem. Should I trade Asian session also? And I don't know if I can see some of this point of interest. I don't think I can show some of this point of interest. Okay, no, most of this point of interest we are correct. That why the pairs I trade hardly hold during Asian session, but there are definitely few times where you see them hold, you see setup playing out during Asian session. I have to check out this stuff myself. Like this one was about 5. Okay, I always trade by 5. So this is for example this point of interest held during Asian session. This time price just there. Okay. Price adjusted. Okay, okay, okay. So, I have to backtest. It's not only one pair. You backtest so many pairs that you trade and discover what your actual problem is and how to overcome that problem. So at the end of the day, whereby you mark out your stuff, mark out your losses, mark out your wins, identify the problem, your wins and your losses. So use your strategy, identify your problems, and you need to ask yourself, look at the market. How often did you see a good trade in this backtesting? How often? I could count all this stuff. You're not to 30 TPs. Now it depends on your time frame. Remember, one thing I advise is that whatever time frame that you use for your entry, try not going below it. Look for unless you already have a point of interest and you want to go lower again to look for confirmation for that point of interest. If you already trade 1 hour, but you want to go 5 minutes, if you missed it to look for confirmation, then that's allowed. But look for one particular point time frame and backtest vigorously. Like go on backtest it very, very, very much. That's what you should do and master. Like for me, you can see everything. All the example I showed here, I use my 1 hour time frame. I don't go below it. Any setups definitely play below the 1 hour time frame, but I don't trade the 1 hour. I don't trade below the 1 hour time frame. So that's it. Another thing is backtesting is where you develop your unique secret and start discovering these secrets. Like we can be looking at the same chart, same strategy and still have different opinions. So there is high tendency you start seeing the stuff that your mentors are missing. You start seeing them when you start backtesting and start looking for these secrets. There's always a reason behind each loss, there's always a reason behind each wins. That's the stuff. And just like I remember last week I had a loss. I had three, is it two loss or three loss? I was sick last week. So I had three loss on GPUD. Of course I was bearish on the pair, but I wanted I wanted I was predicting a buy and the buy was playing out. I wanted the buy to take out cluster of highs up there and I forgot to measure out and note that there is a possibility of price retracing after reaching the premium zone of a range. And when price reached that premium zone, price started falling down. So this is stuff that you need to pay attention to and keep back testing. Come back to the chat once in a while and keep back testing. See you guys on the next video.